Jared, how you doing? We're going back down the Reddit rabbit hole today.
All right. Yes. Did I ever tell you that I use these in my class, my personal finance class?
Yeah, you did mention that.
Yeah. I'm going to be starting that pretty soon in the next couple of weeks.
Nice. You're going to be using No Worries too, I saw.
Yes.
The textbook?
Yes.
That's exciting.
Yeah.
Let's kick this thing off. I saw you tweeted on July 25. That was an LOL close right there. Can you break down what happened?
I mean, the market just collapsed like 1% in the last 15 minutes. Volatility has picked up a lot. On not just on a close to close basis, but on an intraday basis. I mean, I think the day before we had a 100-point swing in the S&P intraday. Volatility has picked up. Put your helmet on. It's getting a little tricky out there.
All right, moving right into the market headlines. First up, McDonald's earnings revenue miss estimates as consumer pullback worsens. So McDonald's missed second quarter earnings and revenue estimates, and the company's same-store sales fell for the first time since the fourth quarter of 2020. We've talked a little bit about fast food and McDonald's in the past, how prices are just soaring. What do you think's going on here?
So now that I'm in the new house, I don't eat a lot of fast food. I actually eat a lot healthier. I just eat lunch in the house. But when I had my office in Myrtle Beach, I would go get fast food all the time. Typically Arby's. Arby's was like my thing. McDonald's, Cookout, but Arby's, I would say 50% of the time. And a roast beef sandwich and a large soda at Arby's was like $11.80. Like this is without the fries. Just the sandwich and the soda was like $11. It was like $12. And McDonald's, like years ago, they had the dollar menu and you could get a double cheeseburger on the dollar menu for $1. And now the double cheeseburger is like $3.49 and a Big Mac is $5.50 or whatever. Like it's gotten a lot more expensive. So what I think this is just an inflation story. Prices went up so much and people are just pulling back. I mean, it used to be that fast food was often your cheapest option if you were looking for a meal. And it's not anymore. And I don't know what people are doing that's cheaper than fast food. I mean, maybe they're going to the grocery store, but that's expensive too. But people are pulling back from McDonald's. McDonald's is lowering prices. They have this $5 value meal. And a lot of the fast food places are lowering prices, but this is really a deflation story. I pulled up the latest Truflation numbers today, and Truflation says that inflation right now is 1.6%, and it keeps going down. So I think it's a very interesting inflation story.
Have you ever seen the show The Bear?
No.
There's this one scene, speaking of Arby's, where this one character has a guest in his car, and there are like several Arby's cups littered all over the floor. And he's like, these are from separate visits. Quick sidebar here. We have some exciting news to share. For the past 9 months, Jared's been working on a massive trade idea, uncovering what's setting up to be the burst of an $8 trillion bubble. And because of that, the Jared Dillian Money team thinks now is the perfect time to make some changes in terms of how we communicate everything with our readers and listeners. But first, Jared, do you mind walking us through what you're cooking up here and tease it a little bit?
It's still a secret. We're not going to reveal what it is yet, but everybody's seen The Big Short, right? And after watching that movie, everybody said to themselves, what if I had seen what those guys saw, right? What if I could have actually put that trade on and made millions of dollars, right? So after that movie came out, everybody was looking for like the next Big Short. Well, I think I found it. I think this is the next Big Short. And it's a tough trade. It's going to take a lot of time. It's going to take a lot of patience, but I think it could really pay off in the end.
So to make sure we're all on the same page, we want your help in the process of how we can share all the details with you. For example, if we held an event, would you be into that? Or say Jared went live on a monthly basis, would you prefer that option? Whatever you end up preferring, you'll get all the details of his trade as long as you help us out by filling out the survey below. And this is all free, by the way, but we're not going to do it without hearing from you first. So we need your help. Just go to jaredsurvey.com and fill out the survey. There's a link in the description below. We'd really appreciate your input and thank you in advance for your help. Okay, let's get back to the show. Next up, Bitcoin approaches 70,000 in wake of Trump's pro-crypto speech. Bitcoin touched the highest level since mid-June after Donald Trump expanded his pro-crypto agenda and as expectations for U.S. Federal Reserve interest rate cuts bolstered investor sentiment. I think it's pretty safe to say that if Trump does get back in office, that crypto will continue to rally.
Yeah, I mean, Trump, I think, even talked about having like a crypto reserve or something like that, buying a bunch of Bitcoins and holding them in reserve, which is not a terrible idea. But I don't think it's really a rate cut story at all. I don't think it has anything to do with that. The one interesting thing about this Bitcoin rally is that it's been completely uncorrelated from stocks. You know, usually Bitcoin is correlated with risk, and particularly tech stocks. So if tech stocks are going up, Bitcoin is going up. And tech stocks are correcting and Bitcoin continues to go up. So I really think it's more the politics story. I think people think Trump is going to get elected. They're pricing that in. And whatever crypto friendly stuff happens out of Washington, you know. But it's funny. I know somebody who was at that Bitcoin conference, and I'm pretty sure he saw Trump's speech, but I haven't talked to him yet. So I don't really know what he said, but.
All right, next up, will mortgage rates finally help housing? If you're deciding if to buy a home or sell one, what the Fed does with interest rates this week and in the coming months will definitely affect you. The central bank will cut its key interest rate perhaps as early as July 31, although we've talked about that. That's probably not going to happen, but more likely in mid-September and then several times over this year and early 2025. Do you agree? What are your thoughts on that?
The bond market is priced in a lot of cuts at this point. They're pricing in more than one cut. I mean, at this point, it's like 3 or 4. I think the bond market's gotten a little ahead of itself. 10-year notes are at like 4.2%. Yields have come down a lot. The last mortgage calculation I saw, the last current mortgage rate was like 6.8. It's probably going to come down to like 6.7, 6.6. I saw, you sent me some notes for this episode and I saw the headline, and I think the headline was something like, will lower interest rates fix the housing market? Like, housing market is just fine. Like, transaction volume is down, but prices are up. Prices continue to go up. And I think just like let's say the Fed cut 150 basis points and 10-year notes were trading at 3% and mortgage rates were at 5.5%. Oh my God. Like, there would be a boom in housing prices and transaction volumes would go up because people would say, okay, even though I have a 3% mortgage, I can afford a 5.5% mortgage. They'll list their house. It'll sell. Real estate agents will make a lot of money. So that's what I think.
It's time for the Reddit rabbit hole. First post, how do you prepare for your parents' golden years when they haven't? So this user writes, my father is 70, single, and does not work. He pulls Social Security and has about $70K in cash assets between cash and CDs. He has recently inherited about $100K in cash and a Morgan Stanley investment account. He has $60K left on a mortgage of a home worth about $100K. No pension, no 401k, no debt besides his mortgage. He wants to buy a vehicle, which he desperately needs, and we're budgeting about $27K for. He has no desire to work and lives well below his means. How do I prepare to help him as he ages?
It didn't mention anything about Social Security. I'm assuming he's getting Social Security of some kind at this point. Like, he's 70, so I assume he's getting Social Security. If this person is obviously living in a super low cost of living area, right? If you have a house that's who has a house that's $100,000? Like, that's it. Like, it's probably a single wide or something like that, or it's a mobile home. So he's living in a mobile home with $60,000 of debt. He just inherited $100,000. Like, the payment on $60,000 in debt is probably like $500 a month. He's probably getting $2,500 a month in Social Security. Like, I mean, the dude is fine. Like, the dude is absolutely fine. Like, there's really there's no need to pay off the mortgage in this case. Like I wouldn't take 60,000 and pay off the mortgage. Like, he's got the income to support it.
What are your thoughts on 27K for a car? Is that too high? It does say that they're budgeting for it though.
It seems high. If your car is 27% of the price of your house, you probably have a pretty expensive car. I mean, I think you could get a used car for 15,000 or something like that. But I can tell you that driving out in the country in South Carolina, past some of these mobile homes, there are some very nice cars parked out in front.
Yeah, cyber trucks and all that.
No, not.
I've seen a couple around Delray Beach now, and they are like, Jesus, they're hideous. They're like those stainless steel fridges with smudges all over them. Not a good look. All right, next up, how much to keep in emergency funds if I have little to no expenses? I make around 65K and live with my parents. Aside from 1K in student loans left, I have no real adult expenses besides about $800 a month I pay for rent, gym, and food. I have no plans of ever owning a home since the prices of houses where I live make that near impossible. People say to save between 6 months to a year's expenses as an emergency fund, but that really wouldn't fit my predicament, so how much should I save?
It seems like this person is kind of angling to have a lower emergency fund since, most of their financial needs are met. My question would be, do you have a cat? Do you have a dog? If you have a cat or a dog, then you need $10,000 in emergency funds because your dog or your cat's going to get sick and you're going to have to take them to the vet. Cars blow up occasionally. You might have to replace a transmission. That's going to be $5,000 or $6,000. Like, the whole purpose of an emergency fund, you cannot predict the types of things that are going to go wrong and where you might need additional expenses. So this person is like, okay, like all my needs are met. Like, I don't really need an emergency fund. Yes, you absolutely do. And, for me, I say 6 months of expenses or $10,000, whichever is less or whichever is greater, excuse me. So that's what I think you need.
Yeah. And it seems doable. I mean, he makes 65K and is only paying about $800 a month for rent and all that. So he should be able to save up pretty quickly.
Yeah.
All right, next post. What should I do with 30K in savings? I'm 26 years old and currently make 92K per year. My financial profile is presented below. Brokerage account, 22K, no recurring contributions. 401K, 50K, 10% contribution, 9% company match. Roth IRA, 23K, recurring contributions to max out this year's limit. HSA 4K, recurring contributions to max out this year's limit. What should I do with 30K in savings?
I didn't commit to memory all the numbers you gave me, but this is a person who has a lot of retirement assets, right? He has a 401k, he has a traditional IRA. I think total it was like 80 or 90,000 or something like that. But he does not have much in the way of non-retirement assets, right? So it's not like this is an emergency fund, but it's kind of an emergency fund. Like, you can't have substantially all of your net worth in retirement accounts. You need some money outside the retirement accounts because if you wanted to buy a new car or take a vacation or something, like, if your money is all tied up in retirement accounts, then you might find yourself in a position where you have to take an early withdrawal and pay a penalty, right? So, what I would say is keep contributing to the retirement accounts, the 10% to the 401k and stuff like that. But I would focus on building up savings that are non-retirement. So he has 30,000 in savings. Why not invest that savings? Why not open up a Vanguard account, get some mutual funds, and, build that over time? So ideally, at some point, he should have about 80 or 90 in retirement assets and about 80 or 90 in non-retirement assets.
So to follow up on what you just said, he did say that he is considering throwing all of it in his brokerage account, specifically the Vanguard S&P 500 ETF or a high yield savings account. Which route would you prefer there?
Probably a combination of the both.
Right.
A combination of the both, yeah.
All right, let's take it over to the week ahead. And the week ahead, a Federal Reserve meeting. The July jobs report and earnings from big tech companies, including Apple, Amazon, Microsoft, and Meta. Also, updates on job openings and consumer confidence are on the calendar. What are your thoughts on what's lying ahead?
Well, the two big things are the Fed meeting and the and payrolls. And I don't think there's really going to be any surprises out of the Fed meeting. I think they're going to say they're going to cut in September. The only potential surprise is if they hinted at cuts in the future. If they did that, if they hinted at cuts beyond the cut in September, that might get the bond market going. It might get interest rates even lower. Getting back to our earlier conversation about the housing market, right? Like that could really have an effect. But I think they're just going to hint at, they're going to telegraph that they're going to have a September rate cut, and that's it. Payrolls on Friday, that's actually the bigger one. We had a strong payroll number 2 months ago. We had a weak payroll number last month. So I can't predict the payroll numbers. They're very volatile. But let me put it this way. If we have a very dovish Fed and a very weak payroll number, you could see 10-year notes below 4% by the end of the week, which would be something.
That wraps it up. Let's get out of here, Jared. I got some videotapes to return. Good talking to you as always. Everyone watching on YouTube, like, subscribe, drop comments. You know the deal. Jared, thanks again. I'll talk to you soon.
Thank you.